How big of a deal is tariffs for the retailers right now? I mean, they are starting to push back, but it doesn't feel like consumer prices have really gone up to this point.
We haven't seen anything in consumer prices. The consumer's not feeling anything. Retailers are feeling something because they know what's coming and they know they're going to have to deal with it, and they're starting to change supply lines and all the things they would have to do. The consumer hasn't seen a thing. As we saw in May, 1.4% down on $1 billion worth of imports coming into the country. I mean, $1 trillion worth of imports coming into the country. What does that mean? That's $14 billion of good news, where the 10% tariffs on $200 million is only $20 billion of bad news. It's darn near a wash. So the consumer hasn't seen anything across the board. Now, in any individual product, maybe. And if you're an individual retailer and you happen to be like bringing in some specific SKU and that's all you've got to sell, you may be seeing a lot. But if you're Walmart, you're not seeing anything yet.
So Walmart's not even feeling the pinch internally? They're not covering for it at this point?
Well, yes, they're covering for it. And if you talk to them, they'll say we've spread out whatever we've got across the board. But if you look at their pricing, it's not up.
Is it going to impact their earnings?
They're not talking enough about it. They don't believe it is, or they would be telling us that. We're not hearing that from our... The retailers have all talked a little bit about it, but nobody has made a significant change in their earnings forecasts where we all went, oh, my God, this is a huge impact. And we're not seeing it yet.
We saw it all of a sudden last night with the chip stocks.
Yes.
You expect that to happen for the retailers at some point, too?
I think what we forget about my kind of retailing, the apparel, footwear, accessories, all that, there's a worldwide oversupply of goods. The ability, therefore, to pass prices through the consumer isn't going to happen. So the consumer is not going to see it. Retailers will take a hit on earnings. If it really goes to 25% on $525 billion, I said it would wipe out 1 year of retail earnings because it'd take that long to offset it and transfer the goods out and all the things, maybe even 18 months to offset it. But it won't get passed through because the consumer won't accept it. Here's why. Let's say Steve's tie goes from $25 to $40 because of tariffs.
This is not a $40 tie, for the record.
There's another guy making a $15 tie that's going to go to $25, and Steve will buy the $25 tie again because there's all kinds of opportunity to substitute. And I watched that through my whole career.
Coming from different sources.
The years of inflation, you'd take the $400 suit to $440, and the guy who was buying it would buy the $360 suit that went to $400, and he just wouldn't buy the other one. Right. And we saw that all across. So you'll see that in my kind of goods. There's just too much opportunity to substitute.
Fair to say that may not be the case with electronics, though?
Well, I don't follow electronics, so
I'm just saying,
it's certainly fair to say that. We know it didn't happen in washers and dryers, and that's about the only example you can find where there's been really significant impact.
Isn't it also an issue of the tariffs so far have not been focused on consumer products,
right,
where the $300 billion that would come next would focus more, and that would be a bigger test for what is absorbed and what's not?
Yeah, there's been almost no impact on my kind of retailing so far because the first 200 wasn't included in my kind of retailing. The next 325 will cover everything we bring in from China. But I'm still saying that it'll be a lot less impact than you see on things like steel and aluminum because there's no substitute there.
Jan, what are margins in the business like?
You mean gross margins?
Yeah.
Gross margins around about 40% in general.
So they have some possibility to absorb.
Well, I'm not counting cost structure.
Well,
I mean, why is Walmart running robots through all their stores now? Because they can reduce not just the gross margin component's not just it. It's also the SG&A side that runs about 20% for most retailers.
Did you see the producer price report, which showed that wholesale trade services, which is the margin of wholesalers and retailers, down 0.5 point the last 2 months, which suggests that, I think if it's like energy, right, you can't destroy it, but you can dissipate it and move it out across. So the importers, the country producing takes a hit, the importers take a hit, the retailers take a hit, and the last piece, if at all, is the consumer.
Yes, and if you raised it high enough, you would finally start seeing some consumer impacts. And maybe 25% on everything is high enough. But as I mentioned to you a while ago, for the first time in history, in shoes, less than 50% of shoes are now coming to the States from China.
Right.
In the last 25 years, that's never been true. They went down by 8%. Guess what went up? Vietnam by 8%. We think by the end of the year, shoes is going to be all the way down to 40%, may break 40% on the way down coming out of China, and it'll break 30% on the way up coming out of Vietnam. That's just one example. And the pricing went down, not up.
Just looking at the retailers, you have to be big to kind of manage through some of this stuff. Is that your answer to it?
If you're Walmart, you're a heck of a lot better off than anybody else, right? Because you're the biggest guy on the block for negotiation. You're also one of the very best at managing costs. If you're well capitalized, you're a winner because you can invest in the robots it takes to drive the cost down. If you're small, poorly capitalized, and narrowly focused on something that's about to get a tariff, you're toast.
Right.
Can it come back, Jan? Back to the United States, the manufacturing?
We will see some manufacturing come back to the United States, but we won't see any jobs come back because all the manufacturing that's coming back is highly automated. We're already starting to see that with shoes, but it's a shoe machine that makes the shoe, right? Some guy pulls the trigger. It's not a bunch of people making the shoe. And I don't see anything coming back that's labor intensive. It's too expensive.